Hello traders, so in this lesson, we're going to cover the three major change of characters. Our basic change of character, our internal to internal change of character, and our external to external change of character. So let's talk about the basic change of character. So as you can see, price here is in a downtrend, making lower lows and lower highs. But at a certain point, your lower high gets broken. And once price comes back inside of the range, looks for internal liquidity, price will change character. And this is your basic change of character. So let's take a look at this basic change of character. So price was in a bearish trend, making lower highs and lower lows, lower highs and lower lows. But at a certain point, price would make a higher high. Instead of continuing the trend of lower highs, price made a higher high. So once price comes out of this range, knowing that this swing right here and this swing right here, this is your range, price will come back inside of the range to look for internal liquidity, which in this case would be this demand order block. And price would use this demand order block to change trend and start a bullish trend. And you can see it in a linear point right here. Price was making lower lows and lower highs, lower lows and lower highs, lower lows and lower highs. At a certain point, price would make a higher high. And this is the first sign of a change of character. And once price comes back inside of the range, price would look for internal liquidity, which could be your point of interest, to change character. So let's take a look at internal to internal change of character. So as you can see here, price is making lower lows and lower highs. And of course, reacting from inside of the range. So the same thing happened here. Price reacted from inside of the range. But instead of breaking structure, price found rejection in your demand extreme zone. And your demand extreme zone will always be the bottom of your range. So price never escaped the range. Price stayed inside of the range and found resistance, got trapped between the buyers and the sellers to change character. Let's take a look at this example of internal to internal change of character. So as you can see, price been in a bullish trend right here. Price been making highs, higher lows, higher highs, higher lows, higher highs. And what you can see here is price been reacting from the extreme of the range. So as you can see here at this rejection point, price reacted from the extreme of its previous range. And once price made this high and retraced low, price wanted to react from this level to continue this trend. So you were expecting this level to break and price to continue a bullish trend, but that didn't happen. And the buyers from this area got stopped by the sellers of this extreme. And this is your internal to internal change of character, where the buyers that came in right here were not enough to overpower the sellers at the extreme of this area. And the sellers from this area reacted. And price broke structure and started a bearish cycle. And an easier explanation would be in your line graph. As you can see, higher highs, higher lows, higher highs, higher lows, higher highs. And you would think that price would react from the extreme right here to continue this trend right here. But no, instead of continuing a bullish trend, price found rejection where the sellers are at and broke structure. And this is your internal to internal change. So before you proceed, make sure you like and comment on the video. As you can see, we do have our monetization turned off for a better viewer experience so you guys do not get interrupted by ads. Let's take a look at the most powerful change of character, which is your external to external. And again, it doesn't happen that often, but it does have the highest probability. So as you can see here, you have a bearish trend. What price would do is it would show you a sign of a basic change of character. And price will come back inside of the range. So price took out the swing high and came back inside of the range and took out the swing low. So you would think this is a stop on continuation, but what price would do is price would reverse and go the complete opposite way. So the purpose of this change of character is trapping both buyers and sellers, taking both buyers and sellers out the market before turning around and changing trend. And this is why this is the most powerful change of character, because what it does is it takes out both buyers and sellers out the market. So let's take a look why external to external change of character is the most powerful. So as you can see here, price been in a bearish trend. Price been in a bearish trend. So once you have your break of structure right here, price instead of making a lower high, price made a higher high. What happens here is there's multiple traps being set. So a support and resistance trader will try and take a setup right here. They will try to take a long setup right here. They would think that price will continue higher. And your smart money trader will try and take a basic change of character trade right here. Their entry would be right here, and their stop loss would either be right below this swing or below this swing. So when an external happens, it takes out both smart money traders and retail traders by taking them both out of the market and going along with the change of character. So let's take a look. So now you have your buyers here being trapped and your sellers here being trapped. So this is an external to external. So again, anybody that purchased price right here, their stop loss has been taken. Anybody that sold price right here at the basic support and resistance, their stop loss has been taken. And anybody that sold at bought at this level, their stop loss has been taken too. So this is why this is the most powerful change of character, because price takes out all the participants before changing character. So let me explain this one more time so we can bring it home. As you can see here, price has been making higher highs, higher lows, higher highs, higher lows. So price was in a bullish trend, and this was our last range, which would be our swing high and our swing low. Price took out the swing low, and by doing that, they trapped anybody that tried to sell the breakout. And then price went up to the high of the range, which would be our swing high, and took out all the buyers who tried to buy this breakout. For then price to return back into the range and take out this level, retrace, and continue lower. As you can see here, the trend was bullish. Price would take out the sellers, take out the buyers, and then break structure and continue lower. So for a quick quiz, what kind of change of character is this? As you can see here, price was bullish, and here price is bearish. That means something happened in the middle. In the middle was your change of character. So what kind of change of character is this? As you can see here, price broke structure, taking out all the sellers. And then once price took the sellers out, price came back to an extreme level, rejected from the extreme, which obviously our extreme is, breaking it into four. Our top quarter right here is our extreme. And price rejects from the extreme to change character. So this would be our basic change of character. And a good rule of thumb to follow is a basic change of character is external to internal. So again, easy way to remember this is external being taken out, a break of structure, and a retracement back to internal. And once price breaks this level, this is your basic change of character. How can you use the information that you have on change of characters to find the entry, and what type of entry would you be looking for? So let's say price breaks structure and comes back inside of the range. If you're looking for your classic basic change of character, you need to understand that your entry could come from anywhere. Why? Because this low and this high is your shelf. So start thinking of this area as there's a lot of buy orders there. Start thinking of this area as there's a lot of buy orders. So inside of this area now you have your point of interest and price, which price could react from. A lot of times you would have a hidden block right below the range or right above the range, somewhere in between. You could have a overlapped fair value gap right here, which I do have a lesson on, somewhere in the middle. Could be somewhere a little bit below your 50%. So it would be somewhere here. And of course, you would have your entry at your extreme. So these are your three entries. A lot of times, price does not get back down all the way down here, even though this would be the safest entry. A lot of time, price can just, once it breaks structure, once it touches the shelf, it reacts. And other times, price would retrace to your fair value gap. So you do have three options. So it's up to the trader to decide what type of entry do they want to focus on. And what you mainly want to do is, as a trader, you don't want to just trade all three point of interest. You want to kind of form your strategy to basically rely on one type of entry. So if you're an extreme trader, so if you like trading extreme scenarios, then you strictly trade the extreme scenario. If you are once price breaks out the range and retraces back to the nearest hidden block or retraces back into the shelf and you're comfortable with a wider stop loss, that would be your entry. And if you're a fair value gap trader, then you should strictly trade the fair value gap. So let's take a look at this example. So what do you have here? You have your change of character, and where are your entries? So like I said previously, you have your hidden block right here. It will be the last order block prior to the movement above. This would be one of your entries. Your second entry would be somewhere around the 50%, which would be right here. And your last entry would be at your extreme. So again, as a trader, you're mapping out your strategy in a way where you're comfortable. If you are comfortable with high risk, you're choosing your first one. Moderate risk, somewhere right here. And then low risk, you're picking your extreme. So again, you don't want to one day trade the hidden block, then the next day you trade a 50% trade, and then the third day trade an extreme. You want to kind of form your trading strategy into specifically trading one. So if you are a hidden block trader, then you are obviously lining up your entry somewhere here, and what you want to do is you want to back test and figure out where would your stop loss be and where your take profit would be, right? If you are a fair value trader, then you are looking for your stop loss and your TP. So you're basically experimenting with different type of entries as your backtest goes, and you're collecting data on what works the best. And if you're an extreme, obviously the same thing. Let's take a look. Let's say you are a hidden block trader, and the safest thing, in my opinion, to do, you would map your hidden block right here and the swing that formed the hidden block and the previous low, and you would put your stop loss at the 50% of that range. So now let's say you are a 50% trader. If you're a fair value trader, your stop loss should be beneath the low. And me personally, I'm not a fan of the 50% trade, just for the fact that if you're going to wait for price to get all the way down here, you might as well wait for price to get down to your extreme. So for me, in a lot of experience and due to current price action, your fair value trade just wouldn't work unless there is a overlapped fair value gap. If that's the case, then you can look for your fair value gap confirmation, which I made a video on previously, to enter the trade. But other than that, if it's just the order block in the middle of the range, then I wouldn't advise that. Because why? Because the stop loss would just be too big, because your safest stop loss here would be right here. And just the risk to reward just doesn't make sense. And as far as your extreme, your entry would be here and your stop loss would be just a little bit below your swing. And you can take the entry back to the extreme of this range. So again, this would be the safest TP right here. And of course, your second TP could always be above the swing if you're looking for a swing trade. As you can see, price will exactly react from your extreme. Hope you guys enjoyed this lesson. Make sure you like, share, and subscribe, but make sure you use code ETMARMY for 20% off everything on the website.